might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in. Hey folks, CA Rachana Ranade here, and I welcome you all to a very interesting case study based video wherein we are going to discuss about a stock which rose almost 300% from the beginning of 2023. But that is just the good part of the story. The bad part is that post listing, that stock had seen a huge beating as well. Of course, we are going to understand about 2 3 crucial points in this video. First, we are going to understand what led to the fall for the stock. Second, we are going to understand what were the strategic decisions which were taken because of which this stock rose amazingly. And number three, we are also going to understand about what things we should keep on tracking post these current results that will come up for this stock. But which stock are we talking about? The stock is Zomato. Okay, if you don't know what does the company do, we have already done a full-fledged video on understanding the business model of the company. So if you don't know anything about Zomato, please watch this video as well so that you get a better understanding of today's video. Now, before we start with the reasons about what went wrong, first let's go into the flashback and understand what happened on day of listing for Zomato. So the stock was actually issued at a price of 76 rupees and it did get listed on the stock exchange at 115 rupees on Bombay Stock Exchange. It did see an all-time high of 138 rupees. Now, just for you all, some additional information is that on the day of listing, basically, there is no specific price cap at which the stock can get listed. What do I mean by that? Can it get listed at 200% of the issue price? Yes, 300%, whatever is possible. But the price point at which it gets listed, from that 20% is the basically upper cap or upper limit till which the stock can go up on day one. And in fact, Zomato hit the upper circuit on the first day of listing. Just in case if you're like, oh, I didn't know about this, it means that you have not done my course on basics of stock market. So please don't forget to enroll for this course wherein 70 plus concepts around the basics of stock market are taught in a most simplified way, right? So now that you have understood the basics about the listing of Zomato, in the next section we are going to discuss about the reasons as to what went wrong for this stock. Now let's try and understand about what went wrong for Zomato. So if you have a look at this chart, you will understand that actually the fall first initial signs started in December 21, where the stock went down by almost 10%. In Jan, it went down by almost 34% and followed by Feb, almost a cut of 11.5%. Now, was this only for Zomato or was the market itself feeling the heat? The answer is actually market was itself feeling the heat because of one major reason, which was the kickstart of Russia-Ukraine war. Okay, in fact, market fell down by 3% plus in the month of February itself. Okay, so now you only understand, if the market is not performing well, then obviously stock specifics are also going to face the heat because of the overall macroeconomic factors, right? Now, what happened post that? Within 6 months, the stock hit an all-time low of 40 rupees 55 paise in July 2022, which was almost 65% lower than its IPO listing price at 115 rupees. Now, when I said that this was the lowest point in July, what happened? Was there something which actually started this whole thing? The answer is yes. What happened in June 2022, just a month before that? Actually, they had announced the acquisition of Blinkit, which is a quick commerce platform. And the street believed that because they have announced the acquisition of Blinkit, this will further delay their profitability timeline. In short, market had not perceived this news in a positive way. Number one, this happened in June 2022. What happened in July 2022? Those who were the pre-IPO investors, their lock-in period ended. Now, who could these be? These could be the promoters, these could be some early investors, these could be employees of the company. Okay, they started selling the stock once their lock-in period was over. Were there any big names who also exited the stock at that point in time? Answer is yes. And they were big names like what? Sequoia, TPG Capital, Lighthouse India, Tiger Global, SoftBank, Alibaba and Uber. So now you can imagine, if such a big selling pressure starts coming in the stock, what happens? Plain apna stock price discovery, right? Price discovery mechanism. If selling is very high, demand is more or less similar, then the stock price ideally falls, right? To add up to this, Professor Aswath Damodaran, who is regarded as one of the valuation gurus, he said that okay, according to him, the price of this stock should be ideally 35 rupees 32 paisa. Okay, let's round it off to 35. And the lowest point that this stock had seen was 40 rupees. Okay, so I hope you have understood two major points till now. Number one was the Blinkit acquisition. Number two was selling pressure due to lock-in period getting over. But was it only Zomato which was facing the heat in 2022? Answer is no. In fact, all the new age tech stocks, they were getting a beating. Like what? Like, as I mentioned, Zomato fell down over 60% from the market value perspective. If I'm talking about Paytm valuation nosedived by almost 68%. In the same year, Nika and Policy Bazaar also lost around 62% and 58% respectively. So all in all these new age tech stocks were taking a beating because of what factors? Multiple factors. Just to name two, three important points. Number one, as I mentioned, macroeconomic uncertainties because of the Russia-Ukraine war, which led to unstable markets, right? Number two, all these new age tech companies, they were in losses, and in spite of being in losses, they were commanding high valuations. And because of it, they started taking a beating, right? And number three, some of them also started facing regulatory challenges. All of these were not considered to be good news for these stocks, and that is why they saw a fall. So now let's understand what worked for Zomato, and for that we are going to go easily, one by one pointer fashion, right? So first things first, if you remember, I told you that in June 2022 they had announced the acquisition of Blinkit, and in August 2022 they actually completed the acquisition. Blinkit became a wholly owned subsidiary of Zomato. So 100% shares are owned by Zomato. Okay. Now, if you remember, I had told you that a lot of people did take this in a negative way, and because of it, the stock corrected and it bottomed out at almost 40 rupees. Now, understand this, that whenever a stock keeps on falling, there are going to be some set of people, some set of investors who feel that, okay, this could be a fair price for the stock now. And that is why even a lot of people can show buying interest at that point in time. Did few people believe that? Few? Have a look at this. FIIs who were holding around what 9.98%, let's round it off to 10% in June 2022, post acquisition. See, acquisition happened in August 2022. September 22, if you see, their shareholding has gone up to 57.87%. If you see, DIS went up from 2.62% to 6.41%. If you look at the public holding, you are just going to cry. Okay, don't have a look at that. So I hope you have understood that there were a lot of investors who felt that yes, now this could be the right time to invest, and that is the reason why a lot of buying interest was seen in the stock in the Q2 especially of 2022. Now, were there certain strategic measures which were implemented by Zomato because of which it did start seeing some good results? So, first and foremost, we'll understand what top four strategic measures were implemented by Zomato. I'm not saying that these were the only four measures. I'm just quoting four measures. Okay. And after understanding these four measures, we are going to understand whether these measures also translated into good financial numbers or not. Okay. So, first and foremost, Zomato exited 225 smaller cities. Not very encouraging performance in recent quarters is what we saw in the news. In simple words, where they saw that there are certain small cities where Zomato is present, but they are not getting in good numbers for the company, good money for the company, they actually shut those cities for Zomato. Second, they started layoffs and they shrunk their workforce by almost 4%. Obviously, that was a measure for cost cutting. Third thing, they increased their commission rates which were charged to restaurants. So I hope you're understanding, they were not only working on the cost cut side, but they were also working up on the increase in revenue side as well. So I'm not telling you how much commissions were increased to, because they were varying from restaurant to restaurant. So all in all, the commissions which were charged to the restaurants, they were increasing for sure. And one last strategic measure that I would want to mention is they introduced a platform fee per order, which they started in August 2023 at 2 rupees per order. So you can imagine, for a customer, paying 2 rupees is nothing, right? But from August 2023, which wherein the platform fee was just 2 rupees per order, they increased it to 3 in October 23, 4 in January 24, and recently in this month only they've increased it to 5 rupees per order. Now you'll be like, 5 rupees per order, क्या ही फर्क पड़ने वाला है? What is the big deal? The news mentioned that Zomato delivers 1.3 million orders a day. That's like 13 lakh orders per day. And if I say 13 lakh multiplied by 5 rupees, it's like 65 lakhs rupees is platform fee that they generate per day. Okay. So I hope you have understood how they took certain strategic measures, especially for the food delivery segment. Now we have to understand that if they worked on increasing revenue, if they worked out on cutting down costs, did it translate into a better EBITDA or not? Right? And for that, have a look at this. Now, if you see here, adjusted EBITDA, food delivery turned positive for the first time in Q2 FY23. I know it's just 0.02 billion, that's 2 crore rupees, but from minus 2.29 billion. So it's like 229 crore rupees of loss in Q2 FY22 to 2 crores profit in Q2 FY23. Of course, this is an adjusted EBITDA, but still that was a good sign. But this was only and only for food delivery business. Okay. Now, were there any other financial matrices that improved? Yes, and for that, have a look at this. Now, if you see here, GOV, that is the gross order value, that also is continuously increasing from Q3 FY23 to Q3 FY24. Even if you have a look at contribution, that is increasing in the same time frame from Q3 FY23 to Q3 FY24. Even if you have a look at the operating metrics, be it monthly transacting customers, be it monthly active food delivery restaurant partners, be it monthly active delivery partners, all in all, on a year on year basis, all these numbers have been improving. Okay, so I hope you have understood that the food delivery segment had already started doing better. Now let's go back to the chart of adjusted EBITDA. So if you have a look at this, we have gone back to the chart, right? So if you see, our food delivery has become positive. What about Hyperpure and quick commerce? Both are still in negative. Still means Q2 FY23. The numbers are still negative. So what we are going to do in the next section of the video, we are going to understand what measures have they taken for the quick commerce business. So now let's move on to the next segment, which is about quick commerce. And just for you to have a quick revision, what is quick commerce? That is nothing but the Blinkit acquisition that we were talking about, right? Now we have to understand certain financial and operating matrices for quick commerce, that is for Blinkit. First and foremost, we'll check on the average monthly transacting customers. See, is app download the only important criteria? No. App download will just talk about customer acquisition. Big question is, are they really transacting or not? Because if they transact, then only they are going to generate revenue for the company, right? So for that, have a look at this. Now, if you see here, average monthly transacting customers, that went up from 2.2 million from Q1 FY23 to 3.9 million in Q4 FY23. So that's a decent enough rise. The average monthly transacting customers, in short, have grown by almost 80%, and that is a good enough rise. But we have to understand that just because customers are transacting, does this mean that they are generating good revenue, good profitability for the company? The answer is no. So for that, we'll have to understand what is the contribution margin from them. So if you see here, for Q1 FY23, I'm talking about the contribution margin as a percentage of what? As a percentage of GOV, and GOV is gross order value. So that was at minus 17.3%. So obviously in losses, contribution margin, but from minus 17.3% to, they have come down to minus 2.7% in what? In Q4 FY23. So remember this, Q4 FY23, they were minus 2.7% in the contribution margin. Okay, but now if you have a look at this figure, can you see minus 2.7% here, right? Now, contribution as a percentage of GOV, which was minus 2.7% in Q4 FY23, that has become positive in Q2 FY24 to 1.3%, and if you check Q3 FY24, that has gone to 2.4%. Okay. Now, if you don't know what is contribution, contribution basically is nothing but revenue minus variable costs only. That is contribution. What about fixed costs? Fixed costs also have to be deducted, right? So we'll not only check contribution, but ideally we should also check the EBITDA, right? And फिर उसके बाद then we'll talk about PBT and PAT. Okay, but first let's come to adjusted EBITDA numbers. Are they still in losses? Answer is yes. But have their losses shrunk? Absolutely. Their losses have gone down from 227 crore rupees in Q3 FY23 to 89 crores rupees, of course, loss again in Q3 FY24. You'll be like, what is the figure for Q4 FY24? It is yet to be announced. Ideally, the result should come up in the next month. But then, has management given any guidance as to when will they break even for adjusted EBITDA? Answer is yes. Management had mentioned in one of their con calls that ideally they should break even at adjusted EBITDA level on or before Q1 FY25. So one thing that you have to check out in the upcoming result is, have they broken even at adjusted EBITDA in this segment? If yes, fantastic, they are on track. In fact, I can say that they have definitely met the expectations which were set by the management, but latest by what? Q1 FY25. So I hope you have understood about this point, which is about the quick commerce or the Blinkit. So if I go back to the chart, exactly this one, you will see that we have understood about quick commerce. Now one segment is remaining, which is Hyperpure, which is we are going to discuss in the next section of the video. Now let's move on with the final segment, which is Hyperpure. But before we move on to this, let's quickly wrap up what we have discussed till now. First, we talked about the food delivery business, right? That was the first segment. It is a B2 B2C segment. Second, we talked about the quick commerce, which was Blinkit. That was also a B2C segment. Now we are moving to Hyperpure, which is a B2B segment. Okay. What are we going to focus on? As usual, we are going to understand about the revenue growth. We are going to understand about the EBITDA levels. Is that okay? So first, let's start with the Hyperpure revenue. For that, have a look at this. Now, if you see here, their revenues have grown from 2 billion INR in FY21 to 5.4 billion INR in FY22 to 15.1 billion INR in FY23. So has the revenue been increasing very nicely? Answer is yes. But what about EBITDA margin? For that, have a look at this. If you see here, it was minus 27% in FY21. So obviously in losses, but it shrunk a little bit to minus 26% in FY22, and it has decently shrunk to minus 13% in FY23. But from FY23, now if we take the journey ahead, let's have a look at what has happened post that. So if you have a look at this, till Q3 FY23, have a look at the first column, right? Adjusted EBITDA as a percentage of revenue at minus 13%. What has happened post that? Q4 FY23, minus 9%, Q1 FY24, minus 6%, to minus 5%, and to minus 4% in Q3 FY24. So if you have a look at this, the revenue has gone up from 421 crore rupees to 859 crore rupees from Q3 FY23 to Q3 FY24, and similarly adjusted EBITDA numbers have also been at a good pace, right? Is it still a negative? Yes, but at least the losses are shrinking. Now, if we have a look at the overall zoomed out view, now we are talking about what? Entity level. Because if you remember, in somewhere in between the video, I mentioned that we should not look only at how many customers are transacting. We should also look at the revenue numbers. We should look at EBITDA numbers. But ultimately, we have to look at the PAT number as well, right? So if you have a look at this chart, you will understand that finally it was in Q1 FY24 that the company turned positive at PAT level. It was 2 crore rupees of profit at PAT level, which improved to 36 crores in Q2 FY24 and finally up to 138 crores in Q3 FY24. Now, just to understand the magnitude of this, Q3 FY23, just a year ago, it was minus 347 crores, so in losses, to directly 138 crores in profit. So, all in all, to sum up, I hope you have understood the segmental performance, plus we also understood the performance of the entity as a whole. One point I would want to mention is that in the management con call, management had specifically mentioned that we believe that our revenue growth should be at 50% on a year-on-year basis for financial year 25. So have they set a tone for financial year 25 as well? Answer is yes. So keep on watching the results for this company, add this stock to your watch list. So I hope you have enjoyed this whole analysis, but what do you have to do? You have to tell me in the comment section what you believe could be the growth story for Zomato. Do you think that the run up will continue, or do you think that this is it? Do let me know your reasons as well. I know that reasons like demographic dividend, then women cooking less at home, and urbanization, all these points are understood. Any new point, if you feel, please let me know in the comment section below. I hope you enjoyed this case study about Zomato. If you did, don't forget to smash the like button. Don't forget to share this video with your friends as well. Till then, take care. Jai Hind and bye bye.